In the spokesman review, which actually I had to go find this and dig a little bit deeper to find this actually, an accountant that vetted Binance's reserves halts all crypto work. Now, what was happening here first, to give you some background, the research that I did before we decided to pick this article, is that there's been claims in FUD surrounding Binance, and that Binance may be in trouble, and that their audits and their reserves are going poorly. Now, the audit news today was, wow, wait, Binance's audit got paused or put on hold. However, that's not the complete story. The accountant that vetted it paused all work on crypto. So there's probably something deeper going on here. But of course, once again, for the clicks and so that you guys click and so that people click the articles and everything happens, of course, the main news is going to focus on, oh, Binance in trouble. Don't worry about it. Let's go ahead and see exactly what's happening, right? So the first thing that I want to point out is the spokesman review also has a tab here purely for marijuana, and it is in Spokane, Washington. And that is a little bit funny because obviously we were talking about clickbait right before this, but the Mazars Group, the accounting firm used by Giant Binance Holdings Limited and other big players in the industry to vouch for their assets held in reserve, has halted all work for crypto clients, dealing a blow to an industry seeking to shore up confidence in the wake of the FTX collapse. The French firm suspended work for cryptocurrency firms because of indications that markets haven't been reassured by the proof of reserves reports it had published so far, according to an email from the firm seen by Bloomberg News. So essentially, what the firm themselves are saying that the markets aren't reassured by their work anyways. Interestingly, like, you wouldn't expect the company that's hired to actually do the work quit the work based on the reception of the work. I'm not sure that this is the whole story, right? Like, if you're being paid to do a job and you believe you're doing your due diligence and the best you can do at that job, the public discourse surrounding your results shouldn't sway you one way or the other if you are absolutely positive in your work, at least in my opinion. The firm was also concerned about intense media scrutiny, the email said. So what it's almost like they're fearful of being canceled, which is kind of odd, right? Mazars has indicated that they will temporarily pause their work with all of their crypto clients globally, a spokesperson for Binance said in a statement to Bloomberg News Friday. Unfortunately, this means that we will not be able to work with Mazars for the moment. A Mazars spokesperson said the firm will issue a statement in due course, declining to comment further. The decision is a setback for an industry that's been trying to bolster its credibility with investors following the collapse of crypto exchange FTX, which has been accused of misusing customer funds. Auditors have faced similar backlash in recent weeks, given that FTX itself had engaged such services prior to its collapse that seemingly missed any warning signs. Cryptocurrencies fell after the report, with Bitcoin down as much as 2.7% in early Europe trading. BNB, the native token of Binance smart contract chain, fell as much as 4.5%. Paris-based Mazars has been at the forefront of the cryptocurrency industry's rush to conduct proof of reserve reports for the likes of Binance and other large exchanges, including Crypto.com and KuCoin. Now, if you recall, Crypto.com did get their proof of reserves out, but how valid is the proof of reserves? If you are in a situation, once again, where you are performing your due diligence and you are confident in your report and you are actually reporting as a third party to the best of your knowledge, to the best of your capabilities, in all honesty, and you are principled and you have good ethics, I do not see a reason why you would stop. So that does mean that not necessarily calling Crypto.com into question here, but definitely calling the results of the proof of reserves into question, right? what I see here is a lack of confidence in the work that they have done. And that is a red flag in my humble opinion. So I wouldn't trust any of the proof of reserves for crypto.com or KuCoin at this particular moment, right? That's kind of how I read this. I'd like to hear what you guys think in the live chat and the comment section below. Proof of reserves reports have face scrutiny as they are not comparable to a full audit in that they show a firm's assets, not its liabilities, and instead serve as snapshots in time that say information provided by clients broadly checks out. And that's a fair assessment because as we saw with the liabilities in FTX, there were $8.9 billion in liabilities at FTX. And then they were claiming $8 billion in assets, which means even if you were looking at the proof of reserves and they all matched up, FTX was still in trouble. But you compound that with the fact that a majority of it was backed by a token that had no backing in and of itself, and you end up in the position that FTX is in. So what does this mean? Well, it means that even if you have a position like crypto.com or one of these others that can prove that they have the assets within custody, it doesn't necessarily mean that they are free from all liabilities. And that is kind of where this is all called into question, right? These disclosures have failed to calm investors, with many opting to pull their tokens off exchanges in fear of further implosions. Over the past 2 weeks, a net $554 million in stablecoins and more than $2 billion in Bitcoin and Ether have been withdrawn from centralized exchanges, according to data from CryptoQuant. Though this is largely stabilized compared to the mass withdrawals seen when FTX collapsed early in November. Another note about this is that this is par for the course, and I want to everybody that if this is your first cycle, sit back, relax, and enjoy, and be prepared to just learn and understand how all of this stuff plays out. This is not dissimilar from any other cycle. In fact, it is exactly what happened last time and the time before, right? What you see is essentially you start to find where the bad actors are, where the poor business planning was, and you start to figure out what all of that was. It all starts to fail, and basically all of the retail investors start to realize that they better self-custody. And a whole new generation of crypto users learn to self-custody. In fact, you would almost say that these particular events are required for cryptocurrency to move in the proper direction. What do I mean by that, right? Well, we have two directions that we're heading into. We are either heading into full centralized custody by federal governments, basically by nation states with CBDCs, where they monitor and protect the assets and tell you how much asset you can have and put an expiration date on it, like we saw in China, which we're going to be talking in the after party about. Lots of crazy stuff. Or you get into full self-custody and you have financial sovereignty and the individual self-custodies. Does it take more responsibility? Is it more difficult? Yes. But with great power comes great responsibility, right? This is the actual basis of the fundamentals of cryptocurrency that is being learned by the new generation of cryptocurrency, of cryptocurrency users. So what I see now is basically a fast generational cycle of about 4 years, right? Where we go through the same pattern every single time. All the FUD happens. All the people that are going to stick around in cryptocurrency are gonna learn the hard way about self-custody. Does that mean that you have no interaction with any centralized platform ever? Of course not. At this point, we are in the position of a hybrid setup. I get the idea of hybrid from basically my experience as a cloud solutions architect, and where that basically comes from is the idea that you have a hybrid server where you essentially have Exchange still on-prem and then you have Exchange in the cloud and they communicate, and it's called hybrid. You basically are moving from an old technology to a new technology. You can't fully move over to the new technology, so you have to have an interim hybrid setup to basically compensate for that. The hybrid connection tool tool here is a centralized exchange, and it connects the old world to the new world. And it will be necessary in this move and in this transition to a digital currency, especially if we want that actual move to go in the proper direction, which in my humble opinion would be the kind of self-custody portion here. Now, there are, of course, attacks already coming down the line. We have basically the idea that they would block in the United States all self-custodial wallets, right? You would not be able to deposit to a centralized exchange from a self-custodial wallet. That is on the table right now. We have the sanctioning of Tornado Cash, removing the privacy options from cryptocurrency. You're already not allowed to utilize any direct exchange between any privacy crypto and the fiat US dollar, right? Or the US dollar in general. You can't go straight from Monero to that. All of these things are starting to break apart. What ends up happening, right, is that they will end up kind of breaking apart completely, and we'll have to see where things go. A lot of people think that we are headed into central bank digital currencies. And while I do see that, and I can definitely sit down and look at it realistically and say, okay, well, maybe you're correct. Bitcoin was a cool experiment. It failed and everything is going in the path of central bank digital currencies. There is still the variable of banks. Now, of course, cryptocurrency fundamentally says that we would basically remove the interference of any third party, including banks. But banks play a very significant role in the battle that is about to ensue over, of course, basically control of money. And that is because if the federal government in the US, or if any nation states across the globe decide to start moving into the direction of central bank digital currencies and directly interacting with their citizens and removing the banking system will fight back. So we end up in a very interesting position where moving forward, the banks are kind of going to be the front line defense against a central bank digital currency. And this is where the argument for probably something like XRP does make sense from the aspect of if we are talking about setting precedents in the court of law. So I think that this is kind of how I lay it all out, that I've been talking about it and playing with it philosophically. I'd like to hear your thoughts, poke holes in it. Let me know what you think in the comment section below, as well as in the live chat. I find it absolutely fascinating. And once again, I got to say, I do feel very blessed to actually be alive during this basically financial digital transformation, because nobody else is going to, there's very few people that get to live through this and see it and actually understand to a certain extent where we're sort of headed, right? And it's cool to see a fork in the road and know that as humanity, we are going to get to choose that fork in the road to a certain extent. Yes, you might feel powerless, but you really aren't. You can influence the direction we take by educating people, by talking to people about what's happening. And this isn't, I get it, cryptocurrency across the board, especially over this previous bull run, has been primarily about making money, right? Everybody got into cryptocurrency initially, for the most part, right, to make money. Nobody really, other than, Satoshi himself and some of the original founders, got into it purely out of some, altruistic motive, right? No, it started out to make money. But hopefully what you start to see as you've been in it is you care a lot. For me personally, I care a lot less about number go up and a lot more about what it's enabling people to do. Stories like, the stable coin, the ability to purchase stable coins for protection against inflation in Argentina, the ability to purchase Digibyte in Venezuela to protect against inflation. These types of stories are the stories that I lean on, especially when we start to get into this sort of situation of a bear market, right? Because we don't have that number go up excitement, but there is still that use, and there is still that hope that's there, right? And I want to make sure that everybody's aware that that's still there. The cryptocurrency sector has long been plagued with a lack of establishing auditing standards, the consequences of which were laid bare in the recent unraveling of FTX. The exchange's co-founder and former CEO, SBF, was arrested this week in the Bahamas and faces civil and criminal charges in the U.S. for wire fraud, among other allegations. Now, this is something you do want to take a look into. There is apparently a possibility, and I'm going to be working on this story here soon. But my understanding is there is a possibility that large transactions that were going through FTX could, target other individuals that were participating within FTX. I'm not sure how much validity there is to that. Maybe you guys can help point me in the right direction for the articles surrounding that, right? But let's go ahead and continue. John J. Ray, FTX's new CEO, told U.S. lawmakers on Tuesday that the defunct exchange had used accounting software QuickBooks to try to keep track of its finances, a system he said was wholly unsuitable for a company of its size. FTX had previously engaged auditing services by Armanino LLP and Prager Metis CPAs LLC. Ray said that FTX had yet to go through Armanino's recent audit of the firm's books. Quote, "We do have to look through the books and records and look at the audits themselves and see how comprehensive they were to see if the audit would have picked up anything else anything that we see," Ray said. "Certainly, we're going to look at the related parties' disclosures that were in those audits, whether there's any footnotes or exceptions." Now, I'm going to jump through most of this because they're going into FTX news. I think you guys are all caught up to date on FTX news. The real question that we had here, of course, was, is there any validity to Binance being in trouble because of the auditors deciding to no longer participate in the audit? And the answer to that, in short, is no, because we didn't actually get any information on it. However, it does mean that it pulls into question of whether or not the auditing, or basically the proof of reserves numbers for KuCoin and Crypto.com, are valid or not. And I think bringing those into question is more news, and a better news headline, that it serves the public better than whether or not Binance is in trouble right now, right? It basically says, hey, you need to be asking more questions of these centralized exchanges and get, basically more information from them as to what their liabilities are compared to their assets, right? That's really what it's about. And so you can't just take a headline like this and run with it and say, Binance is insolvent or whatever. You can't do that, right? Now, probably as fast as the news is moving, by the time we end this, you never know, Binance could go insolvent before I even post this video all the way. It's just the nature of the beast right now in cryptocurrency news. But does it inherently mean anything's wrong with Binance? No, but it does call into question their previous work. That's pretty much how I end that. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.